A Bitcoin short now, and I entered at 7,550 and 7,529. This is if it's a one-to-one. I like to look at a one-to-one to basically, I want to be able to see that I want to say that there's a very high probability that one-to-one risk to reward will work in my favor. And of course I do that with intuition and with a bunch of factors which I have here. So let's start with the reasons for shorting, since that's more comfortable to discuss, but I'm in a short to start out with. So we're in the middle of a triangle which will break bearish if it follows the higher time frame trends. What does that mean? It means that although we're looking at the 1 hour time frame now, this is all in all a bearish structure, a triangle forming, which is most likely to break bearish if we follow the weekly and the monthly and the daily trend even. So what else? We have 3 resistances at the 21 EMA on the daily and the 4-hour EMA. I put those both as one factor because they're both EMA resistances. But the fact that we have 3 of them is worthy to note. And I might even put 4 over there because we have several resistances. And this is just kind of a relevance factor. The relevance factor of the first one is, I mean, you know, it's, considering that this is following the higher time frame trends, I think it's like a 2. But of course, because we haven't broken bearish out of this triangle structure, because we're not at like a very favorable point of the structure, for example, being at the top, you know, where we would see a potential resistance. Like if this short doesn't work out, I'd be very interested in trying to short at these kind of 700-800 type of level. Or I'd be interested in shorting if we break this structure with, you know, with a confluence of other factors. But the fact that we're in this structure is the point is that it's the longer term time frames which are telling us that we're more likely than not to break bearish out of this. We have a head and shoulders break of the neckline. So to look at that in a bit more with a bit more clarity, we can go to the 15-minute, and we can see we had a left shoulder here, a head over there, right shoulder. And you know, I'm not religious about patterns, but what I like about patterns is I like to think, okay, what does this mean? What is the price action telling us? The price action is telling us that the bulls brought us up to here. We resisted with a wick coming down. We created a sort of temporary potential support here. The head tried to push us even further, but the bears just tore it right back down. The bulls tried not one time over here, you can consider this a right shoulder, but 2 times and failed. And then not only that, but with this neckline over here that was created, the bears came down, of course, after that. You know, it was pretty clear that they had lost the fight. They came back and tried again and failed yet again. And that was where I entered my short, at this sort of 7,550 level. And then when we broke this next resistance, I got in a little bit more at 7,529. And then I saw a surprise spike up here to test again, but again we're failing very miserably at breaking that resistance. Now, the other things I'm seeing is a diagonal resistance. I don't place such a high, you know, as I say, the head and shoulders break at the neckline. I place higher importance on that because the price action is really telling me that, you know, the bears are struggling a lot to break important levels, and they're resisting from them. Now, if we just get rid of this head and shoulder for now, and even this resistance line, we can see that the diagonal line here, let's just go to a 3-hour, that we have a diagonal line which has been created from here. So we have, oh wow, it goes all the way up to there. I didn't realize that. So if we take that peak up there and this peak down here, now those two by themselves wouldn't mean that much. But if you now go to the lower time frames, you can see that those peaks very closely align with these potential resistances over here. And every time we hit that line, bam, resist. Not only one candle bringing us down here, this bearish candle. We tried again, bearish candle, inside bar, bear break. We tried again, you know, bearish candle, tried to push us back up. Wick took us down. You know, nothing much to be said about the green candle here, just indecision. But now look at this bearish candle. I mean, as we speak, the price is going down. And my projection is that at the very least, you know, I'm going to start taking profit at 7,486. I have buy orders laddered in this zone. But really, what I'm also looking for is the potential break, not only of this level, but even coming down to 7431, and eventually, that's why I want to keep some of the position for the long-term trade. So maybe 20-30% of the position I'll keep on the off chance that we really do break through here, and that and that I have a good price, good entrance for that potential break. Now, on the bullish side of things, and this isn't really so much the bullish side of things as it is why we shouldn't short. I wouldn't say these are reasons for buying, but certainly reasons for not shorting. So the daily bullish crossover is a little bit scary here on the daily. If you're shorting, you can see that the MACD is ticking up here. We have a bullish crossover already for several days, but of course it is a lagging indicator, so that's why I don't have such a big importance to it. And of course, worthy to note is that most of the reasoning for this position is really based on the lower time frame indicators, right? So, lower time frame levels, very simply put, and indicators. What else? We have no confirmation of a bearish breakout, so that means that although we are in this triangle pattern here, we have no confirmation that we're going to break bearish out of it yet. We have the support line here, 1-2 touches. Even if we break out of this line, it's not saying a lot. We could very easily create a new structure here. That's why we really shouldn't be too religious with these trend lines. We could very easily create a structure like this, where, for example, we break out of this, come and find support here, or even here at this previous low at 7,100, and then continue this triangle. Absolutely a possibility as well. So there's certainly no confirmation of a bearish breakout, which is a pretty important point, because it's kind of betting that we're going to break out bearish here is like, well, there's not quite enough information yet to really justify that trade. We can't just say, well, because we're bearish long term, this is going to break bearish. I personally want to have more reasons for entering a trade than that, such as all of these, for example. In any case, reasons for shorting 15-minute chart. Okay, so this is actually something which I started doing with the red line. So yeah, these are the reasons for not shorting, and I think that the reasons for shorting overpower the reasons for not shorting. Now, coming again to lower time frames to determine where we're taking profit on this trade. As mentioned previously, and I think that I'll actually just keep this in just to keep some perspective on how this could play out. So if we have the triangle there, this could very easily create something like this, where we break these intermediary supports over here at 7471, 7435, and even maybe this one, and we just come down and we find support down here. I think that's absolutely a possibility. But again, it depends on the price action. If we're coming down with a lot of force, and and the bulls are commanding the price action and the volume more, to be more specific, then we could potentially just assume that this new triangle structure won't even hold, potential triangle structure, I say, and that we will actually just break through here. I mean, certainly, if we break through 7,000, it's going to look very hard for the bulls to bring this back up to a new high before taking a new low. So, but just looking on the lower term time frames, if we can find any trends here. So, for example, we do have this line over here, which has 3 touches already. And I don't usually draw trend lines too much on the lower term time frames, unless they really correspond with some very notable price action. I mean, if we look at this trend line, we can see we got a big bounce from it here. A medium sort of bounce from it here. Came back, had a nice big bounce there. Came back, had a relatively big bounce here as well. But now I think, the 4th time testing it, I'm not too convinced that this is going to hold. That being said, if we do a fib extension, we can probably also see that this level corresponds with a 618. So yeah, there is absolutely some reason to believe that that this will hold as some sort of support. potentially, and actually I do have, I think I might have a tiny bit of profit taking at this level, but really the whole structure here, this head and shoulders, structure where the bulls popped up above the previous high, just got smashed down, tried again, smashed down. Okay, the bulls tried to come back to those levels, got smashed, come back, got smashed. So it's just like, this is a real, you can really see, look, the price is already coming down. So I'm gonna now go into my trading platform to see if I'm gonna start taking profits. But I think I'm gonna be taking profits more around this region, the 750, and that will give me this 1.6 to 1. I think I'll probably take about 50% of the profit there, and then maybe a little bit more here, and keep the rest for potential complete breakout of this level. And that's it for me for today.